All right, so let's get straight into it. It's going to be a trading video, first one in a very long time. I am still trading the same way that I was 2 years ago, and lots of stuff has changed in my trading business. Strategy was not one of them. So many times in trading, when we're seeing inconsistency, we turn to the strategy thinking that that's where we need to optimize, that's what we have to change. Most of the time it's not that. It's either something up here, a process issue, etc. So I took some time off, reset my psychology. When I then came back, I realized that my processes were rusty. I wasn't doing everything that I needed to be doing in order to stay on top of my business. I have put a lot of those processes in place. I'll go over that in a future video or whatever. But for now, I do want to hop into the charts because it has been a brilliant week. So we are looking at EU, Euro USD. So I want to cover a brief breakdown of this week. So I trade Stacey Burke's concepts, a mix between Stacey Burke's, ICT, but yeah, my setups, my specific trade setups are Stacey Burke. So I want to cover this trade here, which I took, a low-hanging fruit trade, and then just give a breakdown on the week. So Stacey Burke teaches the day count. So it's just a way of getting our bias. So I'm going to make my big head smaller. There we go. So when we're looking at the chart, just so we know where we are in the market, we utilize the day count, or Stacey utilizes the day count. It's basically looking for price to take out previous day's highs or lows and just counting that. So here we have day 1 drop, day 2 drop, day 3 drop. Day 1 taking out the previous day's low, day 2 taking out the previous day's low, and day 3 taking out the previous day's low. After 3 days of taking out the previous day's low, we will get one of two things. Price will then reverse, or price will, well, one of three things. We get an inside bar, or price will continue in the direction it was going. Fuck that one up. If price continues in the direction it was going, we call that a reset, and we basically count 2 more days for price. Day 1 becomes day 2, and then we finish off the cycle. That was so fucking confusing. Forget about all of that. Basically, we're just counting 3 days that take out the previous day's high or low. So day 1, day 2, day 3. What we're looking for to start the day count is for price to put in a peak formation below a range. So I don't know why I made myself bigger there. I'm going on the charts again. So here we have a peak formation outside the range, and we want that to fail. If it fails, that's when we then start our day count. So peak formation outside the range, and we fail. This is a low-hanging fruit trade. Low-hanging fruit is my favorite trade. It is my, what would you call it, bread and butter. It's the trade that I find most simple, most repeatable, and as low stress as trading can be set up. So here we have a low hanging fruit. Day 1, day 2, day 3. We put in a peak formation below the range. Then we start the day count in the opposite direction. Day 1 long, day 2 long, day 3 long. So on day 2, we have a first red day trade. Because it's up, it's first green day, but I view all of my trades as short. I only short. So for instance, when I was taking this trade, I had the market like this. Oopsie daisy, that's not good. I'm going to plug that in now just so we don't lose. There we go. So I had my chart like this, so I was shorting even though it was long. So day 1, day 2, day 3. Once we have day 3 here, price has put a peak formation in above the range and that has failed. So this is what we're looking for. This signifies to us that that cycle, that 3-day rise cycle, is finished. So once we have that, along with a few other confluences, which I'm going to cover now, that is all we need to execute this trade. As I said, it's a very simple setup, very easy to follow setup. So Stacey Burke teaches day 1, day 2, day 3. He also teaches like ICT as well. ICT teaches, what is it, the power of 3? Power, something like that. Steve Marrow, 3 levels. Whatever school of thought you're learning from, they're all talking about the same concepts. Price moves in 3s. So we have here level 1. Level 1. Don't let, the purpose of level 1 is to trap the volume, so they don't let anybody escape. This is level 1 on the opposite side. Level 2, trade both ways. Purpose of level 2 is to get liquidity in both sides. And level 3, eat into that volume fast and hard in 3 pushes, a 1, 2, and a 1, 2, 3. So day 1, day 2, day 3, 25 pips, 25 pips, 25 pips. So you can see here, this thick blue line is double zeros, this thin one is 50, and these are my quarter points. So if this was gold, this could be 50 pip boxes or even 100 pip boxes. Because it's a currency pair, it's 25 pips. It's just based on the ADR, the average daily range. Most currency pairs will be 25 pip boxes. So we have day 1, day 2, day 3, level 1, level 2, level 3, 25, 25, 25. So numbers box 1, 2, 3. We then put in a peak formation above the range, also above last week's range, above the range, and we broke down. So once we've broken down after breaching out of a previous level, that to me said this is go time. We are then looking for a pump in the opposite direction. So if we're looking to short, we're looking for price to pump long. We're looking for traders to get induced, and that's the liquidity, that's the petrol that we're going to use to sponsor the move down. That's what gives it the fast and hard movement. I like the low-hanging fruit, this particular version of it. Once we've broken out of a previous, this could be, for instance, this could be Friday's high and low. So just say this was Friday's high and we've broken out of it on a Monday. That's ideal conditions for a first red day trade. This is also ideal because we've broken out of a previous week's range and failed. The characteristics that we're looking for is for price to break out of a level that's then activating, let's say, that liquidity. So you got all the breakout traders who are trading outside of the range and then failing. Once it's done that, price has then got everything it needs to move because we've breached the range and then we've failed. So price has gone out of the, I'm just repeating the same thing over and over again because that's the key to this trade. It's such a simple setup, but you must see that. You must see the range, peak formation outside of it, and then a break on the inside. And then all we're waiting for is either a creeping trend against the trade or a pump. Here we get a pump, price creeps up, and then once I use the hour, the clock for my entries. Again, ICT, time and price theory. Steve Marrow uses the clock. Stacey Burke, what does he call it? Hourly rotation, time rotation. Same shit, just using, it's an algorithm, so algorithms are numbers, time is numbers, we use the numbers. So look at this, I know you can't see the bottom of my screen now, where the clock is. This is where, this candle here is where the half hour mark begins. So this candle begins, starts in consolidation, getting liquidity on both sides, and then boom, level 1. This is everyone who is trading this 30-minute candle. So we have 30-minute traders, we have 15-minute traders, we have 5-minute, we have 1-minute traders. They're all long. Everybody's long because the candle opens here, and the first thing we do is we put in a high, put in a low, put in a high again. So all the short-term liquidity, which is a lot of traders, and the markets, the algorithm is just taking out the traders. They're all long. So in the last 5 minutes, this is the last 2 minutes of the candle here. Last 2 minutes, we engulf, boom, I'm in the trade. The whole hour's gone long, and then we engulf in the last 5 minute candle. The last few minutes of the candle close short after we've broken out of the previous range, failed, got a pump in the opposite direction, rolled over, boom, I'm in the trade. And with this trade, now what I am targeting every time is one full expansion of the range that trapped the volume. Don't know why I made myself bigger there, but for instance here, if this is the pump, this is the pump that trapped the volume, I'm measuring one full expansion of that range. Again, because it's algorithmic, we should treat it like an algorithm. Algorithms work off of levels. Let me see if I can pull it up in a 5 minute. My range, I've taken it off. Anyways, this is one full measured expansion of that range. It's what I use every time. We can probably see this one here. Oopsie daisy. This is the same thing. Yeah, there we go. So this is the range that trapped the volume. So I'm going to extend that out. So measure from the high to the low, extrapolate that out. So it's a 100% expansion of the range that trapped the volume. So this pump long is what got the liquidity into the market. Based off of my back testing, I can comfortably hold this trade for one full expansion of that range in the opposite direction. We can see price did run on longer. I don't mind. I don't care. I know I can, at the minute, execute on this and take it to a level. My results show that it will come to this point, so I don't need to crank out every last pip out of the market. What I'm aiming for and striving for is something rinse and repeatable, something that I can come to the market every week and execute on. Once that's consistent, once I'm executing consistently on the same setup over and over again, all I do then is scale up the size. So once I have this nailed, once I'm cranking it out, I will just keep taking the same trade and just increase the position size periodically. That way I don't need to change anything. I don't need to make more pips to make more money. All I have to do is keep doing the same thing and then just increase one metric, which is the position size. So Stacey has multiple setups. The ones that I take are low-hanging fruit and first red day. So we can see here on the way up, we had peak formation outside of the range. Peak formation outside of the range. Peak formation outside of the range. So this was a low-hanging fruit trade, and this was a first red day trade. This was a low-hanging fruit trade. This was a first red day trade. Very simple to follow setups. Execution can be a little different on the first red day. I have struggled with that one quite a bit, which is why my main focus is on low-hanging fruit right now. But the first red day trade, it is also simple. Again, I'm struggling to wheedle out certain times where I shouldn't be taking the trade. But yeah, low-hanging fruit, first red day, and then we have a beautiful short squeeze. So I'll just quickly touch on the short squeeze. It's another beautiful, beautiful setup. One which I'm not currently taking. I'm just monitoring it. So I'm adding this to the missed trade section of my system to then potentially take it in the future. So my entry criteria for my setups are I look for a break of structure, a liquidation, and then a fair value gap to target for all of you ICT lovers. But yeah, here we get the break of structure, liquidation, and then a fair value gap to target. So one little gem that I've noticed is if we have a large ranging day, if price closes at or near the extreme, so like we can see here, price closes right down by literally almost at the extreme. What I'm looking for there is then a consolidation. So oftentimes it comes in a high and low, so we'd get like a box, price would coil sideways, or we can get it in a channel form, so price can coil diagonally. If we get that, if price closes at the extreme and then we get coil volume, the next day, backtest this, anticipate an explosion, either in the short direction or the long direction. Because we had day 1, day 2, day 3, so we take out previous days for 3 days in a row. Using the day count, we can anticipate this is going to be a short squeeze, so price is going to go long. But yeah, it's just it's a really good one that I've noticed. I'm backtesting it more and adding it to my system. So yeah, that's pretty much it. I don't know if I can pull up my system here. Can I? It was really laggy every time I tried to do it. No, I can't. I'll go through it a different day. But if you don't have an active system in place, a analysis system, a review system, a journaling process where you are actively learning each week. I don't know why I'm saying you. I didn't have that in place. I was doing it, but I was doing it across multiple different apps. I was sometimes using a physical journal. I was sometimes using slides. I was using Evernote. I had all my information in so many different fucking places, and it was just driving me nuts. I've now put everything into one workspace where it's all there, and I do my pre-market analysis. I do my weekly hypothesis. Then if I take a trade, I click a button and it brings me to the next page, and then I input the details of that trade. Those numbers all get added to a database, and it gives me percentages of all my setups. What's my best hour? What's my best setup? What's my best trade direction? What's my best day of the week? Because it's all there, I'm staying on top of it, and I'm actually catching the trades that I'm marking out now. As before, you know, when you have like an area in the market you want to take a trade from, you have a zone, you're waiting for it all week, and you look and prices moved from there, and it just happens, and it makes you even more sick because you fucking are anticipating that. I just got so sick of doing that over and over and over again that I said enough is enough. If I can build the system now, it's all there and it is working for me. I would highly advise you to build one yourself, whether you do your work on Google Docs, on Evernote, whatever. If you use Notion, I use Notion. Whatever you use, put something in place where you're actively analyzing and reviewing, executing and reviewing, all in one place. My one's in the first link in the description if you want to use my one. If not, just build something yourself. Just use, as I said, whatever software you're using. Notion is my favorite. So even if you don't want to use my one, Notion is feckin' sick. It's drag and drop, so easy to make stuff in there. Highly, highly advise. That's all from me. I am going to be posting much more regularly now. Now that I've got everything in place, my trading is more streamlined, so it's freed up more time. Make some videos. So I'm going to be posting a few times a week. So for those of you who I haven't seen in a while, hello. And to any new people, hello also. That's all, guys. I will see you soon. Peace.